All right, today's Tuesday Tidbit is on navigating new construction loans. So, new construction can actually encompass a whole bunch of different directions, but we're primarily going to be talking about two different directions in a rather short period of time. So, strap in. So, the first is you're driving through Erie, you're driving through Longmont, you come across Richmond or Lennar, and the home builder owns all the lots. They are then saying, hey, you can put one of these properties on one of these lots. You are basically buying both the land and the property from the builder themselves. With that, the financing is going to be pretty similar. Now, when you buy new construction, you play by the builder's rules, right? So you're not going to be signing the standard state contract, which is rather lean, 26 pages plus or minus. You're going to be signing the builder's contract, which is going to be over 100 pages. It gives the builder all the protection in the world and you very, very little. So that's one big difference. The other big difference is timing. With new construction, the builder's going to say, hey, look, you have to get your loan conditionally approved. Usually it's within about 21 days. You got 21 days to get this loan approved. It's still a piece of dirt. There's literally a hole in the ground. There is no property. How can we possibly get the loan approved? It's kind of a two-stage approval process. We do the initial conditional approval, make sure your credit, income, and assets are both in good shape. We then issue a letter saying, hey, look, your loan is conditionally approved. The builder, please keep proceeding. Then once we get to within about 60 to 90 days of closing, and once the drywall is complete, that's when the timeline becomes very solidified very quickly. Up until that point, the builder's time frame is going to be second quarter of next year, third quarter of next. It's going to be kind of loosey-goosey until the drywall's up, and then their timeline is going to become very solidified very, very quickly. So we don't typically lock in the rate until you get to within 60 to 90 days. Elevations does have an extended rate lock program where we can lock in the rate for up to a year in advance. There's some caveats with that. It's got higher costs, higher rates as well. So something to keep an eye out for, certainly worth looking at. But most folks, what they end up doing is just kind of floating the rate until you get to within that 60, 90-day window and then locking in the rate. Similarly, just like the timeline is longer, not only is it a two-stage approval process, it's also a two-stage appraisal process. We do the initial appraisal when the drywall is complete, and then we're going to do the 1004D is the technical term, but it's basically an appraisal completion report to make sure that the house is complete in accordance with the plans that the appraiser originally based their appraisal on. We will send the appraiser back out the week of closing, make sure the work is done, and we'll have that finalized report, and then we're in good shape to go ahead and close at that point. The other scenario is a completely different one, which is you see a piece of land that you want to buy, great, and then you want to hire your own builders to come do the work. That's going to be a construction loan. That is going to be a commercial loan. Construction loan is a type of commercial loan. So those are kind of differences. That's kind of a couple things to keep an eye out for. Much more complicated process. Let me know if you have any questions on that. Thank you so much.